Well, welcome everyone. My name is Jana Truman. I am the owner and the managing broker for SVN XL Commercial Real Estate and for XL Exit Advisors. We, as I said before, we are a full service commercial real estate brokerage, and we help people buy, sell, and invest in commercial real estate. And I am so happy to have guests here tonight that are going to help expand your horizons and to hopefully inspire you by the projects that they have done, and also because they are trusted vetted vendors, they can help you maybe avoid some pitfalls and mistakes. Traditionally though, before we get started, we take just a real brief second and we talk about the market and what's going on. This is a segment, it's just basically an update to help you know what's going on in the different kinds of segments, because while a lot of you are interested in multifamily that are here tonight, we also do office, industrial, hospitality, retail, and land. So I'm going to just go really quickly through this. Hospitality, actually, in the Nashville region has had an amazing and stellar recovery. The recovery of the Nashville's hotel performance metrics accelerated sharply in March and April as a group, and basically those sales picked up. Hotel sales volume in 2022 has already surpassed $1 billion, the highest annual total ever. The high sales volume has been headlined by the trades of 5 luxury hotels in the first 7 months of the year, and the trades of the 2 luxury properties in the first quarter, the Hutton and the W Nashville, helped lift that first quarter to the highest quarterly volume ever in history of Nashville. That's a pretty amazing thing. So they actually have a 20 million units of, or 20 million square feet of supply. And in the last 12 months, they've had 13.5 million square feet of demand. So what that's telling you is that they are, occupancy is still on the lower side as they are recovering from COVID. And so what we're seeing is a lot of people who have bought these big, beautiful hotels, when they bought them at a rate that was not sustainable during COVID. And so now they've turned around and they're walking away, and someone is swooping in and getting a bargain, and they're really happy with their result. And they're actually poised to be able to be successful in the next couple of quarters, because we do anticipate, unless God willing, of course, there's not another big hiccup with the coronavirus or something else that we cannot predict, right? Industrial is the darling of the commercial real estate market right now for the greater Nashville area. They delivered 8.1 million square feet last year, and they had 8 million square feet of absorption. So what that means is that there's still only a 3.2% vacancy rate. Let that sink in. That is an incredible amount of people. And that what this statistic does not tell you is that there is a huge pent-up demand, especially for properties that are between 2,500 and 20,000 square feet. So the things that are being built tend to be the big logistics centers and things like that. And they really are, that part of it is slowing down, but the demand for the smaller spaces is as high as it's been. Nashville's industrial market continues to flourish. Demand for industrial space in the area remains above historical norms. And that means that rent from year over year, from last year to this year, if you're in that space trying to find someplace to rent or to buy, the rent growth was 13.6%, which is a terrible, terrible number, because that means that if you're looking to rent space, you're going to be paying, and your lease is coming up. Even if you want to stay where you're at, it is a guarantee that your landlord is going to raise your rent. And that there's just no way to get around that. Multifamily has also had a little bit of simmering. It was in full boil, and now it's starting. It's still simmering. It's still hot, but it is starting to slow from its record pace in 2021. They had over 9,020 units delivered, 4,008 of those, and 4,807 of those were absorbed. They have a vacancy rate of 7.5. So we're seeing some of the multifamily places starting to offer things like 1 month guarantees and 1 to 2 months rent or things like that, which is actually a really great sign because for a while there that was really crazy. And for the year over year from now, it's, to put this in perspective, last year we had like 19% rent growth. It's just a measly 7.2% rent growth, which in the great scheme of things, folks, is actually still really, really good. Especially when you're looking at stock market, what you could get in the stock market right now. Yeah.
Do those reports have the ability to give you the visibility into A, B, or C class
Yes.
performance? Because I mean, we show, I guess, in other reports that I've seen, it's always average rent growth, and the A class is always going to skew the B and the C. I'd love to see
Sure.
median or some differentiation.
Sure.
between that.
Well,
And I'm
actually,
also super nosy and-
no, that's good. That's a valid question. So CoStar didn't used to, when they did their market reports, it was Class A only, and they got wise, and so now they have started to segment them out. So if you want to get more information and get access to our data, that, of course, contact me and I will give you more. But the biggest thing is there he is, yay. It's clear that multifamily investors have not shied away from the recent changes in the market, and this last year there were 3.8 billion sales volume year to date, and transactional pricing is on the rise. This part, the part of that that's killing me is now and for you that are investors in that realm, we're starting to see cap rates as low in the threes. So for those Californians who thought they were going to come to Nashville and get bargains, especially in the Class A and Class B, sorry, it's not going to happen. And that means that our local investors are competing against national REITs, people who are not at the whims of financing. So we just have that kind of attention. Office is the one area where we're seeing more softening than some. We actually had 1.7 million square feet of office delivered last year, and we had 629,000 square feet that were actually absorbed. This is a little bit skewed, so coming back to what Tommy was saying, that many of those that are doing the construction for office are building for they're either built to suit or spec with the intention of courting a headquarters, and so that entire building is showing as vacant, and so it's skewing the office vacancy rates to some degree because they're holding them vacant on purpose for the right tenant. So, but if you are looking for office right now, anywhere under 6,000 square feet, you're actually finding that there are choices now for the first time, probably in a long time, because even through the COVID and the pandemic, we really did not have that many vacancies because people were holding on, trying to make it and wait. And now we're seeing what's called right sizing, and people are actually finally saying, okay, our people are not going to come back to work, so we really only need half the space. And so subleasing has gone up. And then other people were successful and they're backfilling in, or they're having to find additional space. So we're having a little bit of a churn in the office market, and I actually find that to be on the healthy side. But the market rent growth is only 2.1. So that's good news if you're trying to find office space right now. And finally, for retail, there was 638,000 square feet of retail in the, this is primarily in the Davidson County metro area, so that's not referring to, Rutherford County or Maury or those areas, but they only built 638,000, but they absorbed 1.3 million. So what that tells you, again, is that you have a vacancy rate of only 3.5%. That means because we've had such strong economic growth and population growth, that Nashville's retail market has not suffered like the rest of the nation. And unfortunately, that means that we have, because of that low vacancy rate, there continues to be rent growth. And this is, Carson's world, where he helps people find space. And the asking rent growth was 9.8%. So if you're looking for retail space, again, there is hardly any of it, and it goes really quickly. So we have had to resort to essentially knowing what all the projects are that are coming to the market so that we can make sure that we can get in ahead of the game. And unfortunately, that also means that if you're looking for retail space, the likelihood of you having to pay for tenant build-out, a larger portion of tenant build-out to go from cold dark shell to your retail space is also happening. So buckle in if you want to be here and you want to do business in retail in Nashville, because it is not going to be cheap. But the rewards are awesome because our demographics continue to shine nationwide. All right, so thank you for that. And I think we are, and I know I'm excited to hear I've actually known Robert Pick for a while, and he's got such an interesting story. He started out in financing, essentially. Can you tell us a little bit about your background, and then the mold remediation?
How far back you want me to go?
Well,
I was go back as far as 1958. I have a couple
There
of
you
years
go.
on me, but I won't go.
Okay, just give us kind of that.
So now I'm in the restoration business. I have been for the last a little over 4 years, but I'll call myself a serial entrepreneur. I owned an investment bank for many years, and in doing that, I owned manufacturing companies, distribution companies, different types of financial services companies. We've invested in real estate. We've invested in other businesses. So it's sort of an eclectic background. And this is my restoration business is sort of the next chapter. I wanted something as recession-proof as possible. I want, not only recession-proof, it proved to be pandemic-proof. Right, and the service business, those of you who are in it know you do the right thing, you take care of your customers, you build it properly and they will come. To use that line from the movie, it is not a lot of tricks behind that. It's just doing the right thing and taking care of customers. And we're growing up where we are growing this business now. So when Jana asked me to sort of give my thoughts on multifamily and how mold remediation fits or doesn't fit in, which is probably more appropriate, I'm delighted to share whatever thoughts, good or bad, that I have.
Well, we really wanted to help you, as if you're looking at buying something, maybe be able to know what are some of the tips and tricks, and then also what are some of the biggest mistakes that you can make. And then also, just if you have to make that dreaded call, what would that look like? And maybe he can just go through what the process usually is. So if you own the property now and something happens. So let's just start. What are the top 3 mistakes that building owners make when they are dealing with mold remediation?
Hiding it, and hiding it. And forgive me, I don't mean to be flip, but we do a lot of work for multifamilies. We do a lot of single-family homes that are owned by investors, some large investors, some private investors. And the biggest mistake I see is that there is a desire to, you heard of self-medicate, self-remediate, right? People think you can use bleach. It's one of the great misconceptions that bleach will get rid of mold. All bleach does is hide the mold. And if anything, the mold feeds on the bleach and it speeds up the growing process. Mold grows on any living material, and bleach just exacerbates the problem. So the biggest problem, to get back to your question, is I find landlords, big or small, try to hide the problem. And when you hide the problem, it's just going to come back to bite you, because tenants, forget tenants, I could tell you, people freak out. You say mold, people's heads spin, right? Great for business, right? As you know, you do CrossFit, right? It's the same thing. You say mold, people's, literally, it's like The Exorcist, people's heads start spinning around, and they'll do whatever possible to get rid of the mold. Can it be bad? Yes. if you have some sort of underlying health issue, it's going to exacerbate it. It's going to make it worse, and people notice it. You could smell it, especially in the warm weather months, right? So I see landlords just try to, what can we do to hide it? You can't hide it. You have to properly remediate it, and sometimes that's going to come with a cost. It's going to be removing damaged materials. It's going to be using an antimicrobial. Sometimes you have to set up negative air pressure. There are a lot of things that go into mold remediation, but what you can't do is try to mask it. That will always come back to bite you because it doesn't stop growing. And the more it grows, the worse it's going to get. And what causes it? It's usually some sort of water-related damage. It doesn't just come out of nowhere. It's a leaky roof. It's condensation on a pipe that may be sitting too close to a wall. Right, we all have, or we see HVAC closets where the pipes just run very close to a wall, and there's a lot of condensation, and that in warm weather months that moisture tends to get onto drywall gypsum, and that's where mold is going to grow, and it grows quickly, really quick.
So the water comes down and the landlord goes in and he takes the fan and he puts it facing the wall, and then he walks away.
We see that. Thank you. And we see that a lot also. If someone is going to use fans, air movers to try to dry a spot, and all you're doing is blowing spores around, right? So you take a bad problem and you're making it that much worse. So what could have been a simple fix on day 1, by day 50 or day 100, and I'm just using that as an example, it's going to be that much worse, and the expense to remediate that mold is going to be that much greater. So my advice to anybody in single-family homes, multifamily homes, don't hide it. Just deal with it head on, and don't let your tenant, because tenants will freak out. They will make your life miserable. I see it. Everyone threatens lawsuits all day long. They threaten lawsuits to their landlords, and we're the ones who have to go in and sort of tiptoe around an angry tenant and try to satisfy our property owner clients.
So